Hi, I'm Tobin. I'm the head of healthcare research here at Hedgeye. Today I'm joined by Hesham Shaaban. We're going to talk about Weight Watchers, a name that we've been short in the past, and we initiated another short position recently last week and held a conference call earlier today. We're going to go through a couple of reasons why we think this is a $20 or sub $20 stock. Do you want to touch on some of that, Hesham?
Basically, the main story behind this right now is that Weight Watchers is facing secular decline. It's a completely different business than what it was 3 or 4 years ago. This used to be a consumer discretionary story in that you have income, you'll seek out discretionary services like weight loss.
Right.
But what's been happening over the last few years is this, or I'm sorry, the last couple of years is this divergence from consumer discretionary growth and Weight Watchers membership growth.
Right, so disposable income has been what, rising 2% or so?
On average, about 2%, while Weight Watchers membership trends have been decelerating, and now they're down about 14%.
And years prior, even in the Great Recession, you could see a very tight relationship.
Absolutely, absolutely.
And what, again, like on this break, why do you think? I guess what you're saying is that it's in a secular decline. And what are you seeing in the short term here to give yourself conviction that we're going to get to a sub $20 stock?
Well, we built a Google tracker, which is based off of Google Trends. And the way this works is that we built an index of search terms that gauges weight loss demand out, amongst consumers, right? And what we found is this massive deceleration in the first quarter of 2014.
Right, and these kinds of searches that people do will typically lead, or at least match up with North American attendance for Weight Watchers.
Absolutely. So we've identified a 0.9 correlation between our tracker and Weight Watchers North American trends.
And how does this stack up this time around versus prior years? How bad is this selling season?
This is looking like the worst selling season in the last 7 years.
It's pretty dramatic. And any reason why that is? Like, if you had to explain, if we're seeing this worst selling season, is there anything that's changed materially over the last couple of years that would explain that?
Sure. I mean, a lot of people like to speak about the availability of apps that are out there, free apps from iTunes or Android, that you can set your own weight loss goals and manage it yourself. But the bigger story is actually growing access, right? So between 2011 and 2013, smartphone penetration has almost doubled.
It's gone from what, 40%?
40% to about 74% if you look at the major carriers.
more apps and more smartphones in the hands of people searching for these free apps.
Right.
And if I have a choice for free, what do I have to pay for a Weight Watchers product?
On a monthly basis, if you're going to do the monthly pass, we're talking about $40. The internet program is about $19 a month.
So 40, 19,
free.
Free. Okay. And if you roll this all up in terms of, here we've got a $29 stock, we think you get to below 20, it's going to be based on earnings and then missing the consensus number. Tell me about where your earnings projections flesh out for 2014.
We're in the 245 to 265 range. It could potentially go lower, but the street's at 280. Now, what we've done in this table right here is we have done a scenario analysis on EPS, and what we're doing is we're running a scenario on membership growth versus pricing growth. And if you look over in the bottom left of the chart, what you're seeing is that in order to get to consensus estimate, you have to assume the status quo, that everything's staying.
You have to assume, okay, so they've been declining in this mid-teens range. You have to just assume that continues, it doesn't get worse.
Exactly.
But we're seeing that it's getting worse, and there's a whole reason for that, which is the smartphone access.
It's particularly the smartphone access
and the number of apps that have multiplied it for free.
Right, basically. And if you note the trajectory of smartphone access over the last 2-3 years, it's really accelerated, and that explains the break from discretionary.
So a heavily shorted stock, a little dangerous, but we think we've got a pretty great case on the secular decline here.
Right. I mean, it's definitely dangerous in the short term, but at the end of the day, there's no reason why this thing can't dip below 20 because it's an old company in a new industry.
Right. All right. Thank you very much for joining us. Joining Hesham and I to talk about Weight Watchers. If you want to tweet us, @HedgeyeHC. Look forward to hearing from you. Thank you.